Hello everyone and welcome back to the channel. Today we're diving into a topic that's been confusing and frustrating for a lot of Americans lately: Social Security benefits that fall short of expectations. Imagine this. You've worked hard your entire life, paid your dues, and finally applied for Social Security thinking you'd receive a decent monthly check to rely on. But then, the number that appears isn't what you expected. Not even close. If this sounds familiar, you're definitely not alone. The good news? There are explanations, and in some cases, even solutions. In this video, we'll explore 7 possible reasons why your Social Security benefit may be lower than you anticipated, based on recent insights by Kaylee Hagan. So let's get right into it. One of the most common reasons for receiving less in Social Security benefits is a short work history. This isn't just about whether you worked at all. It's about how long and consistently you worked over the years. To even qualify for Social Security retirement benefits, you need at least 40 work credits. In 2025, 1 credit equals $1,810 in earnings, and you can earn a maximum of 4 credits per year. That means you need at least 10 years of qualifying work to receive any retirement benefit. But even more importantly, your benefit is calculated based on your 35 highest earning years. If you've worked fewer than 35 years, the Social Security Administration fills in those missing years with zeros. These zero-income years drag your average down and result in a lower monthly payment. To maximize your benefit, it's often a good idea to keep working, even part-time, until you've filled out at least 35 earning years. Another significant factor that can affect your Social Security amount is your lifetime earnings, and sometimes the results can be surprising. Generally, higher lifetime earnings mean higher Social Security benefits. But even high earners can get less than they expect because of how the system is structured. Social Security taxes only apply to income up to a certain annual cap. In 2025, that cap is $176,100. Any income above that figure isn't taxed for Social Security and doesn't count toward your benefit calculation. So if you earn $300,000 or more a year, only the first $176,100 counts toward your benefit. On the flip side, if you had many low-income years or a career with inconsistent earnings, your benefit will naturally be lower as well. The key takeaway? What matters isn't just your salary, it's how much of that salary is subject to Social Security tax year after year. Next, let's talk about claiming benefits too early. While you can begin collecting Social Security as early as age 62, doing so comes with a major catch. Your benefits are permanently reduced for every month you claim before your full retirement age, or FRA, which is currently 67 for most people. The reduction is steep. You'll lose 0.05% for each of the first 36 months you claim early, and 0.05% for every additional month. If you claim right at 62, and your FRA is 67, you could be looking at a 30% permanent reduction in your monthly check. And if you're still working while receiving benefits and haven't reached FRA, the earnings test kicks in. In 2025, if you earn more than $23,400, Social Security will withhold $1 for every $2 you earn above the limit. That withheld money is not gone forever. It gets credited back to you after you reach full retirement age. But in the short term, it definitely affects your bottom line. Another often overlooked reason your benefit may be lower than expected is due to debt. Specifically, debts owed to the federal government. Social Security benefits are protected from most creditors, but if you owe back taxes to the IRS, they can garnish up to 15% of each check. Similarly, if you owe child support or alimony, the government can withhold between 50% and 65% of your Social Security payments. It's essential to resolve or manage these obligations before you apply for benefits. Otherwise, your monthly check may be much lower than what your statement shows, and you might not realize it until the payments start coming in. Changes to your marital status can also significantly affect your Social Security benefits. Let's say you were planning on claiming spousal benefits based on your current or former partner's earnings. If you divorced before completing 10 years of marriage, you're no longer eligible to collect spousal benefits based on your ex's record. Additionally, if you remarry, you typically lose eligibility to claim spousal benefits based on an ex-spouse record, unless your new marriage ends. These rules can be complex and often overlooked, but they can cause significant changes to your expected benefits. That's why it's important to understand how your relationship decisions could impact your financial picture in retirement. Another factor that may reduce your Social Security benefit is the automatic withholding of Medicare Part B premiums. If you're enrolled in Medicare, the government typically deducts your Part B premium straight from your Social Security check before it ever reaches your bank account. In 2025, the standard Medicare Part B premium is $185 per month. While this setup makes it convenient to stay current with your premiums, it can come as a surprise if you were expecting to receive the full benefit amount shown on your award letter. The takeaway here is simple. Always check your net benefit, not just your gross amount, so you know exactly what you'll receive each month. Lastly, let's address income taxes on your Social Security benefits. Depending on your total income, including earnings from a job, pensions, and retirement account withdrawals, you may owe federal income tax on up to 85% of your Social Security payments. This often surprises retirees who assumed their Social Security benefits would be tax-free. If your combined income, defined as your adjusted gross income plus non-taxable interest plus half your Social Security benefits, exceeds certain thresholds, you'll likely owe taxes. You can request that the Social Security Administration withhold federal taxes from your monthly benefit to avoid a surprise tax bill, or plan ahead by setting money aside during the year. Either way, failing to account for taxes can significantly impact your actual take-home income. Now, if you've received a Social Security check that's lower than you expected, don't panic. The first step you should take is to contact the Social Security Administration and ask for a detailed explanation of how your benefit was calculated. It's possible there was an error, or you may find that one or more of the factors we've discussed is responsible. In conclusion, Social Security is a complex system with many moving parts. It's not always easy to predict exactly what you'll receive, and sometimes the final number can be disappointing. But by understanding the key reasons your benefit may fall short, you can take proactive steps to improve your financial situation. Whether it's working a little longer, checking for errors, or managing your taxes better, you have more control than you might think. Thanks for tuning in today. If you found this information helpful, don't forget to give this video a thumbs up, subscribe for more updates, and leave a comment below with your questions or personal experiences. Until next time, stay informed, stay empowered, and take control of your retirement journey.